This is going to be a homework walkthrough for Chapter 3-2. So question 1, I'm going to do in the McGraw-Hill workbook so you can see how to input the titles in the schedules that you will create. And then other problems in this book, I'll switch to my Excel document that I've created. So question 1, Premier Corporation has provided the following data concerning last month's manufacturing operations. Tells me the purchases, the indirect materials used in production, direct labor, manufacturing overhead applied to work in process, under applied overhead, and then it tells me the inventory, the beginning and ending balance for raw materials, work in process, and finished goods. So the first required, we're going to prepare a schedule of cost of goods manufactured for the month. So in this schedule, that will start with beginning work in process inventory. So make sure you pick the right one. And I'm going to fill in all of the labels first. And then we will have the beginning raw materials inventory. So beginning work in process. And then under direct materials will be my beginning raw materials inventory. And I'm going to add the purchases of raw materials. Okay, and that will give me a total. And then the next is less ending raw materials. Less ending raw materials. So don't pick the wrong one. So it's less ending raw materials. That tells me the raw materials used in production. And then I'm going to less indirect materials used in production. So that will tell me the direct materials used in production. And then I have direct labor and manufacturing overhead. And then that line is left blank. Total manufacturing costs will be there. And this last line, we need to less ending work in process. So less ending work in process inventory. Okay, so I've got all my titles set, so I'm not going to forget any of those. Now I need to figure out the numbers. So beginning work in process inventory. Work in process is right here. There's my beginning right there, 54,900. 54900. Beginning raw materials is going to be 10,700. Add the purchase of raw materials. So right there, purchase of raw materials, 31,000. And so I need to add those two together to get the total raw materials available. So 10,700 plus 31,000 is 41,700. And then I need to less the ending raw materials inventory. So raw materials ending inventory is 18,400. And that will tell me the raw materials used in production. So 41,700 less or minus 18,400 equals 23,300. And then I need to less indirect materials used in production. Right here, indirect materials used in production, 4,550. Okay, and they did the math for me right there. So that is the direct materials used in production. It's beginning raw materials plus purchases equals materials available minus ending inventory for raw materials equals the raw materials used in production minus indirect materials used in production equals direct materials used in production. Okay. So then I just need my direct labor, which is right here. 59,200. And then my manufacturing overhead, right there, manufacturing overhead applied to work in process is 87,700. Okay, and that line gets left blank. They added these for me, and then they added the beginning work in process plus the total manufacturing gives the total manufacturing a cost to account for. And then I'm going to less ending work in process inventory. Work in process ending is 69,000. So that 220,550 minus 69,000 equals the cost of goods manufactured, 151,550. Okay, so that is my schedule of cost of goods manufactured. Feel free to take a screenshot real quick. Okay, now required 2. Prepare a schedule of cost of goods sold in the month. Assume the underapplied or overapplied overhead is close to cost of goods sold. That tells me I'm going to have to figure out some things. So first, a schedule of cost of goods sold looks like this. Beginning finished goods inventory. Hold on. Okay. And then we add the cost of goods manufactured, and that equals cost of goods available for sale less ending finished goods inventory, right? We're talking about finished goods here. And that equals the unadjusted cost of goods sold. And then we will add underapplied overhead. And then that's the adjusted cost of goods sold. Okay, let's see if we can figure out where to get these numbers from. So beginning finished goods inventory, that's easy. They gave me that. Finished goods, beginning inventory is 33,500. Add cost of goods manufactured. Huh. Well, guess what? We just figured that out in required 1. Cost of goods manufactured, right there. 151,550. 151,550. Okay, so I do exactly what it says. I take 33,500 plus 1,000 or 151,550, and that equals 185,050. Okay, less ending finished goods inventory. So there's finished goods. There's my ending inventory is 43,100. So now I do exactly what it says. I take the cost of goods available for sale, 185,050, and subtract 43,100, and that gives me 141,950. And then I need to add the over or under applied. Okay, sorry. Add the under applied overhead, because right here at the beginning they tell me it's under applied, which means at the beginning of the year I did not put enough on the books, and so I need to add this in because what actually happened was more than what I had planned on. So that's why we're adding in 4,140. Just checking for typos. Okay, so then I do exactly what it says. I take the unadjusted cost of goods sold, I add the underapplied overhead, and that gives me 146,090 for my adjusted cost of goods sold. Okay, so that was question one. Now I'm going to switch to my Excel worksheet so that I can access these and show you the math. I feel like in question one, it was just a lot of pulling the numbers down that they gave us and putting it into the schedule. So in this one, the following cost data related to the manufacturing activities of Chang Company during the just completed year. So at the end of the year, and they give us all of the manufacturing overhead, indirect materials, indirect labor, property taxes for the factory, utilities, depreciation, insurance, total actual manufacturing overhead costs incurred. So there's my actual. That's going to be important. Other costs incurred. So this is my purchases of raw materials, both direct and indirect. And here's my direct labor cost. And then they give me my inventory balances for raw materials, beginning and ending, work in process, beginning and ending. The company uses a predetermined overhead rate of $20 per machine hour to apply overhead to cost of jobs. A total of 20,600 machine hours were used during the year. So I don't know about you, but that sounds like something I need to remember. So $20 is my predetermined overhead rate, and my machine hours were 20,600. Okay, so that could come in handy later. And again, all of this is, I just copied all of this so that I could reference those numbers. Okay, required. Compute the amount of underapplied or overapplied overhead costs for the year. Well, here's my actual, right? Right here. Here's my actual. So how do I figure out my estimated? Well, here's my predetermined overhead rate. Here's my estimated hours. So I just multiply those two to come up with my estimated manufacturing overhead cost. So I'm going to equal my estimated minus my actual, and I come up with $8,000. Okay, was that over applied or under applied? So this is what I applied on the books at the beginning of the year. This is what I thought was going to happen. This is what actually happened. So I over applied. This is higher than what actually happened. So I over applied. Okay. That's all for required one. Now, required two, they're asking me for prepare a schedule of cost of goods manufactured for the year. All right, let's see if we can figure out what data they've given me and what I've got to figure out. So first of all, I filled in the titles, beginning work in process inventory goes there. Do I know that? Beginning work in process inventory right there, 40,900. Okay, then comes my beginning raw materials inventory. That was also given to me. And then I need to add my purchases of raw materials. So that's going to be that 409,000 right there. So I add those two, close some parentheses. Okay, so there's my total raw materials available. Now I subtract the ending raw materials inventory, which was given to me right here. equals this one minus this one. And that gives me my raw materials used in production. Then I need to less my indirect materials. So that was also given to me right at the very top of all of this information, right? On the book, it was this one right here. Okay. And so the direct materials used in production then is that 399,000 minus 15,900 equals direct materials used in production. Okay, so far so good. Now we need direct labor. Right there. Direct labor cost is right below the purchases of raw materials. And then manufacturing overhead applied. Well, look, we figured that out, right? From when we did required one, we did the $20 times the hours equals the applied overhead. Okay, then that one stays blank. They added that up for me. So it's those three numbers added up equals 864,100. And then we add that beginning work in process inventory to that to come up with the 9,900 and 5,000. And McGraw-Hill did that math for you. So now we're going to less ending work in process inventory. Remember, be very careful which ones you're picking, because if you pick the wrong title here for the wrong account, then it's going to give you an incomplete. Ending work in process. So here's work in process ending. I've got two equals. Ending work in process. And so then I simply take the total manufacturing cost to account for minus the ending work in process, right? Because that's still left over. And that gives me a cost of goods manufactured of 834,100. Okay, question 3. Before I start question 3, I just want to show you this chart I made. Feel free to take a screenshot, but it's just kind of showing you what things are called when they go into and out of T accounts. So when materials are purchased, they are a debit in raw materials. And that can be direct or indirect. And then as they go out of, that doesn't make sense. That one should just be this anyway. No, that's right, because they could be indirect raw materials. Okay, so the credits in raw materials, they go out of raw materials as direct materials in work in process, and the indirect materials go in as manufacturing overhead in work in process. And direct labor also goes into work in process. So the work in process always has direct materials, direct labor, and manufacturing overhead in it. Now, when it goes out of work in process as a credit, it is called the cost of goods manufactured. And it goes into finished goods when we finish the work. So the cost of goods manufactured plus the beginning inventory of finished goods equals the cost of goods available for sale. Now, when it's sold, it goes out of finished goods, and those costs go into cost of goods sold, and it is the unadjusted cost of goods sold because we need to figure out manufacturing overhead. Did we under-apply it or over-apply it? Under-applied gets added, over-applied gets subtracted. Cost of goods sold is a normal debit balance. So hopefully that helps you understand when they switch up what they're calling things, it's because of where it is, which T account it's in, and what part of the process of manufacturing this accounting or these numbers are in. Okay, back to the problem. Question 3, Superior Company provided the following data for the year ended December 31st. All raw materials are used in production as direct materials. Okay, so there's not going to be raw materials are all direct. So we have our selling expenses, purchase of raw materials, direct labor, apparently is a question mark, administrative expenses, manufacturing overhead applied. Okay, so that would have been the beginning of the year. Actual manufacturing overhead costs. Okay, so we have our applied, we have our actual, and just by looking at this, I can already tell this is going to be over applied, right? Because the 369,000 is more than what actually happened, 354,000. So that's a clue for me later. Inventory balances at the beginning and end of the year were as follows. Raw materials, they give me a beginning and ending. Work in process, so I got a question mark and an ending. And finished goods, I have a beginning and a question mark. So to me, it looks like we're going to have to do some backwards, working through this backwards. Um, so here's where I copied the selling expenses and that data, and I left this one blank because it was a question mark. And then I copied down my balances and I left these blank because they were a question mark. I forgot to erase these, so you won't get to see me type them in, but these numbers, I pulled them directly out of the words so that I wouldn't lose them. So the total manufacturing costs added to production for the year was 675,000. So there's my total manufacturing cost. The cost of goods available for sale totaled 725,000. So there's my cost of goods available for sale. The unadjusted cost of goods sold totaled 661,000. I put that there and labeled it. And then my net operating income was 32,000. So I put that right there and labeled it. The company's underapplied or overapplied overhead is closed to the cost of goods sold. So that's going to be important later. Okay, now we're finally to, I've got all my data organized. We're finally to what are we supposed to do with it? So they want me to prepare schedules of cost of good manufactured and a schedule of cost of goods sold and an income statement. And their hint is to prepare the income statement and schedule of cost of goods sold first, and then the schedule of cost of goods manufactured. And that's because you're going to figure out some numbers that you need in these first two documents that for the schedule of cost of goods manufactured. Okay, so let's start off with an income statement. So income statement, right? This must be traditional format because it's sales minus cost of goods sold equals gross margin. And then we take the expenses, selling and administrative expenses, and subtract those and to get net operating income. Well, first off, let's see, did they tell me sales? Tell me selling expenses. So no, I don't have enough data to put sales in first, but what did they tell me? Okay, so I know I have net operating income, right? So we're going to work backwards. They gave me net operating income. Okay. What else did they give me? They gave me the selling expenses. I'm pretty sure I saw that. Selling expenses was that first one. Did they tell me my administrative expenses? Yes, they did. Okay. So my cost of goods sold. Ah, okay, I see. So for cost of goods sold, I need to figure out, like I was talking about, the over or under applied, right? So I take my applied, what I thought was going to happen, and I subtract what actually happened, and it's 15,000, and the applied is more than, so it is over applied. So now I can figure out my cost of goods sold by subtracting the over applied, right? I applied too much, so I need to subtract it. So cost of goods sold is going to equal the cost of goods available for sale minus the over applied. Nope, that's not it. I did something wrong. Oh, I picked the wrong one. Ah, you guys should be yelling at me across the screen. We're doing cost of goods sold, not available for sale. Don't make that same mistake. So it should be the 661,000 unadjusted cost of goods sold minus the over applied manufacturing overhead cost of 646,000. Okay. So now with this data, I should be able to figure out sales, right? Because sales minus this equals this. So I should be able to add the cost of goods sold plus the selling and administrative expenses, and then back up, and then subtract net operating income, and that should leave me with sales. And I did it wrong. Was add. There we go. So it is. It's all of these added together equals sales. Yeah. So the cost of goods sold plus the two expenses plus the net operating income equals total sales. So that's how we work backwards to create an income statement. Okay. Now that we've done that, we can move on to the schedule of cost of goods sold. So schedule of cost of goods sold deals with beginning finished goods inventory, add cost of goods manufactured, equals the cost of goods available for sale, less the ending finished goods inventory, equals the unadjusted cost of goods sold, less the over applied, equals the adjusted cost of goods sold. So beginning finished goods inventory, they told me, oh wait, finished goods, 34,000. Okay, so far so good. Add the cost of goods manufactured. Where did I get that number from? Ah, okay, so I don't know the cost of goods manufactured yet, but they did tell me the cost of goods available for sale, right? And again, was given up in this paragraph up here. I just made another copy of it. So it was right here. Cost of goods available for sale is 725,000. So I remember I pulled those numbers out and I just copied that again. So I didn't have to keep scrolling up to find them. So if beginning finished goods plus cost of goods manufactured equals cost of goods available for sale, then I can work backwards and take cost of goods available for sale minus beginning finished goods inventory, and that what's left over is the cost of goods manufactured. So far, so good. Less ending finished goods inventory. They did not give me that. So I've got to figure that out. So let's see. So we can figure that out. Ending finished goods inventory is going to be the cost of goods available for sale minus the unadjusted cost of goods sold. So ending finished goods inventory equals the cost of goods available for sale minus the unadjusted cost of goods sold, right? So that's our finished goods. It deals with this, what's available for sale. Okay. So I will take my cost of goods available for sale minus ending finished goods inventory equals the unadjusted cost of goods sold. Oh, look, it does. And then I'm going to subtract the over applied, which we figured out up here, right? Manufacturing overhead applied minus actual. Okay. Oh, whoops. I didn't. I just need this to be this number because of how I'm doing this. So now I take the unadjusted minus the over applied equals adjusted cost of goods sold. So that is going to be important for something, I'm sure. Okay. Now we can do the schedule of cost of goods manufactured. So it's the beginning work in process inventory. So be careful when you're selecting the account title. And then direct materials are beginning raw materials inventory, add the purchases of raw materials. All right, this is work in process. These are raw materials. That equals the total raw materials available less ending raw materials inventory equals the direct materials used in production, and then direct labor, manufacturing overhead, and that equals the total manufacturing cost added to production, and then the total manufacturing cost to account for. Don't know why that. Let's delete that for a moment. And then less ending work in process inventory equals the cost of goods manufactured. Okay. Guess what? I believe they did not give us the beginning work in process inventory right there. So we'll work backwards. What do we know? Well, beginning raw materials inventory. We know that. And then the purchases of raw materials. right there. They gave me that. So that is going to equal sum parentheses, those two numbers, close parentheses. So there's my total raw materials available. And then I need my raw materials ending. Right there, raw materials ending. So that is going to be equals the total raw materials available minus the raw materials ending. Okay, direct labor. It did not tell me direct labor. So that's what I want to do, guys. Delete, delete, delete. Okay, direct labor is going to be calculated by taking okay, so this is why. So we need to take, so if you remember, our manufacturing costs are comprised of direct labors, direct material, and manufacturing overhead. So we're going to take, this is going to be equal to our total manufacturing cost. So this number right here is direct materials, direct labor, and manufacturing overhead. So if we take that total and subtract, we just figured out direct materials used in production right there. And I also need to subtract the manufacturing overhead that was applied. Manufacturing overhead applied to work in process. And what's left over is the direct labor. Okay, so again, that total manufacturing cost minus direct materials used in production and minus the applied manufacturing overhead equals the direct labor. So what's left over is direct labor. Because the reverse is also true. If I added direct labor, direct materials, and manufacturing overhead applied, it equals total manufacturing cost. Okay, manufacturing overhead then, I don't know yet. Total manufacturing cost added to production. Okay, they gave me that number right here. It was part of that paragraph. 675,000 is the total manufacturing cost. So now I know normally these three numbers would add together. Wait. Oh, okay. So normally these three numbers would add together and equal this number. So if I take total manufacturing costs added to production minus direct materials minus direct labor, what's left over is manufacturing overhead. So again, because we figured out direct materials and direct labor, and they gave us the total manufacturing cost, we take total manufacturing costs minus direct materials minus direct labor, and what's left over is manufacturing overhead. Okay. So now, do I have enough information? Almost. Ah, there it is. Okay, maybe it was somewhere. So let's see, do I have an ending work in process inventory? I do. Okay, so work in process and ending work in process inventory goes right there. Now, this number right here, cost of goods manufactured, we figured that out up above. We figured that out in our schedule of cost of goods sold. So this number is what goes right there. And now with these three numbers, we can figure out beginning work in process inventory. Right? Oh, wait, what? Yes. Let's see if I do this right. Okay. So we will take equals this. Ah, sorry. Yeah, messed up. Okay, sorry. Equals this plus this minus this. Nope, that's wrong. Sorry about this. I messed up my worksheet, so now I'm confused. Okay, I promise I'm gonna figure this out. Just open up another file. Okay, so I'm gonna take the 691 plus the 24,000 minus the 675,000. There we go. Okay, so again, working backwards to get my beginning work in process inventory, we take the cost of goods manufactured. Sorry, I'll highlight this. We take the cost of goods manufactured plus the ending work in process inventory minus the total manufacturing costs added to production equals beginning work in process inventory. Okay, you don't have to do this because the book does this, but it's actually So that's how I got that beginning work in process inventory. It's the cost of goods manufactured plus the ending work in process inventory, because we're working backwards, minus the total manufacturing cost that equals the beginning work in process inventory. So this is a complicated problem because several times you have to work backwards, but hopefully this video is helpful.